I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree.
How do you think tariffs will impact inflation?
Over time, they're a tax on goods. I mean, the tooth fairy doesn't pay them.
The Oracle of Omaha has spoken, and his warning is chilling. For a man who's weathered every major economic crisis since the 1950s, Warren Buffett's latest statement is sending shockwaves through Wall Street. This is worse than any recession I've seen, when the world's most successful investor, who has navigated through 11 recessions and countless market crashes, issues such a dire warning. Even the most seasoned investors stop in their tracks. Warren Buffett, the 94-year-old investing legend who's built a fortune worth over $120 billion, has broken his usual optimistic tone with a stark assessment of America's economic future. His concerns? A perfect storm of factors that he believes could trigger something far more devastating than the 2008 financial crisis, the dot-com bubble burst, or even the stagflation of the 1970s. In a rare public interview and through his recent actions, Buffett has revealed why he's holding an unprecedented $348 billion cash pile at Berkshire Hathaway, the largest in the company's history. We wouldn't want to be owning anything that we thought was in a currency that was really going to hell, and that's the big thing we worry about with the United States currency. Buffett candidly admitted to shareholders, this isn't just another market prediction, it's a fundamental concern about the very fabric of the American economy. The trigger for Buffett's alarm? The explosive cocktail of tariffs, ballooning government spending, and what he calls an act of war on the economy. I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree. Buffett stated in his recent interview, his words carry the weight of history. He's comparing current economic policies to wartime measures, suggesting that what we're witnessing could lead to a full-blown economic conflict. Goldman Sachs has already raised its recession probability to 45%, while JP Morgan is even more pessimistic with a 60% chance of recession in 2025. Both firms cite tariff policies as the primary catalyst for their upgraded warnings. But Buffett sees something even deeper, a fundamental threat to the US dollar's value and America's economic stability. The numbers are staggering. Government spending has increased by $200 billion in the first 100 days of the current administration compared to the same period last year, according to CBS News analysis. Meanwhile, the US dollar index has already dropped more than 8% since the start of the year. The trade deficit has ballooned to an astronomical $918 billion in 2024, a figure that has Buffett particularly worried. Fiscal policy is what scares me in the US, Buffett warns. All the motivations are to do things that could cause a lot of trouble. Coming from a man who has consistently been bullish on America throughout his 7-decade investing career, this shift in tone is remarkable. Even during the darkest days of the 2008 financial crisis, Buffett was buying stocks and encouraging others to do the same. But now, he's sitting on the sidelines with the largest cash hoard in Berkshire's history. The Oracle's concern about tariffs isn't theoretical, it's based on hard economic reality. Using the example of the auto industry, where profit margins average just 3 to 5%, Buffett illustrates how a 25% tariff can completely disrupt pricing dynamics. A car that costs $25,000 to build in Mexico suddenly costs $31,250 to import with tariffs, more than the $30,000 it costs to build domestically. While this might seem like it supports American manufacturing, Buffett warns of the unintended consequences. There are attacks on goods, Buffett explains about tariffs. I mean, you know the tooth fairy doesn't pay them. His point is clear. Consumers ultimately bear the cost through higher prices. This inflationary pressure, combined with the Federal Reserve's concerns about stagflation, creates what Buffett sees as a perfect storm for economic disaster. The trade deficit problem runs deeper than most realize. As Buffett explained back in 2018, when a country runs persistent trade deficits, it's essentially giving up claim checks on our country. Foreign nations accumulate US dollars and use them to buy American assets, real estate businesses, government bonds. Eventually, they have claims on all our wealth, Buffett warns. This dynamic has played out dramatically with Detroit, once America's fifth largest city with more millionaires than New York or Chicago, now reduced to a shadow of its former self after losing its manufacturing base. The numbers tell a sobering story. U.S. manufacturing employment has fallen from 20 million workers in 1979 to just 12 million today, a 40% reduction despite significant population growth. Manufacturing's share of U.S. employment has plummeted from 30% in the 1950s to single digits today. Each lost manufacturing job represents not just a paycheck, but a piece of America's economic independence. What makes Buffett's warning particularly alarming is his track record. This is the man who called the dot-com bubble, predicted the housing crisis, and has successfully navigated every major economic downturn since the 1950s. When he says this is worse than any recession I've seen, he's comparing current conditions to the stagflation of the 1970s, the savings and loan crisis of the 1980s, the dot-com crash of 2000, and the Great Recession of 2008. Despite his dire warnings, Buffett hasn't completely abandoned hope. He's provided a roadmap for investors to protect themselves. First, gold has historically been a safe haven during currency crises. The precious metal is already up more than 20% in the past 6 months, trading above $3,300 per ounce. Buffett suggests considering ETFs like SPDR, Gold Shares GLD for exposure without the hassle of physical bullion. Second, real assets like real estate can provide inflation protection. Buffett points to REITs like Realty Income, which owns 15,600 properties across multiple countries and offers a 5.66% dividend yield. Digital Realty, focused on data centers, presents another opportunity despite short-term volatility with its 2.9% yield and potential AI-driven growth. Third, Buffett's timeless advice remains relevant. Be fearful when others are greedy, and be greedy when others are fearful. He reminds investors that while weak businesses struggle during recessions, strong companies emerge stronger. Most major companies will be setting new profit records 5, 10, and 20 years from now, he predicts. The parallels to 2008 are instructive. After Buffett's famous New York Times op-ed encouraging people to buy American stocks, the market fell another 29% before bottoming out. But those who heeded his advice and stayed invested saw the S&P 500 soar more than 300% over the next decade. The greedy investors who bought during the darkest hours reaped the biggest rewards. Yet this time feels different, even to Buffett. The combination of massive government spending, aggressive tariff policies, currency devaluation fears, and a record trade deficit creates unprecedented challenges. Washington was Washington. Buffett observes with characteristic understatement. The problem with politics is that it tends to have to make tiny compromises as you go along. These compromises, he suggests, are leading to policies that could have devastating long-term consequences. As internet searches for tariffs spike to record levels, most Americans are only beginning to understand what Buffett already sees clearly. The economic war he describes isn't coming, it's already here. The question isn't whether we'll face economic turbulence, but how severe it will be and how long it will last. For investors, Buffett's message is clear. Prepare for the worst while hoping for the best. His unprecedented cash position at Berkshire Hathaway speaks louder than words. When the world's greatest investor is this worried about the economy, sitting on the sidelines with hundreds of billions in cash, it's time for all of us to pay attention. This isn't just another market cycle. According to Warren Buffett, this could be worse than any recession we've ever seen. As Buffett himself often says, never bet against America, but right now, he's certainly hedging his bets. In a world where the Oracle of Omaha is sounding the alarm, perhaps the wisest course is to follow his lead. Stay defensive, preserve capital, and wait for the storm to pass. Because if Warren Buffett is right, this storm could be unlike anything we've weathered before.